welcome. You're watching Business Today TV. I'm Sakshi Batra. The IT department has reportedly found a 10,000 crore rupees tax evasion by sellers on Facebook, Instagram, WhatsApp and such social media platforms. The IT department has notified such 45 brands operating across the country, saying that either these companies have not paid their taxes at all or have underreported their income. Now, if you already have a small homegrown business that you may be running on social media, or you may be thinking of setting up one, watch this video till the very end. Joining in with me on this special edition is a renowned tax expert, Gauri Chadda, who is going to be helping us navigate through the do's and the don'ts of such businesses in terms of taxation. Gauri, welcome to Business Today TV and thank you so much for taking the time out. First up, I'd like to understand from you, what are your key thoughts on this news flow that the IT department is talking about 10,000 crore rupees of a tax fraud by such e-tailers or retailers online on social media platforms? How serious is this situation?
Of course, Sakshi, this is a very serious situation because I guess people don't understand that now the IT department is very vigilant, very strict. Everything is online. You are receiving online payments. If you are selling products via Facebook, Instagram, or any social media platform and receiving payments online, everything is being reported to the income tax department, and the whole system of the income tax department, the technology they are using is very high-end technology, and you cannot escape without paying the right tax which is due on you. So I guess the small business entities and even the larger ones, they need to go through their accounts and be sure that they are paying their taxes correctly. They are not evading any tax, or like few entities, I guess, were not even paying taxes and earning a lot of money online. So I guess, yeah, the entities really need to be careful about it.
So, Gauri, tell us, let's talk about who is the IT department really referring to here. They've said that 45 notices have been sent, but many are expected to follow. So, what kind of businesses are perhaps under the IT department's lens here?
See, there are so many businesses which are running online. Like people are selling furniture, shoes, bags, jewelry. So many items are being sold online, and the IT department is focusing on these sellers who are selling a lot of stuff online. Even they are selling abroad. They are exporting their goods, but not paying the right amount of tax. I read somewhere that the senior official of the department has, quoted some entity which was earning around which was gaining revenue of around 110 crores, and the income reported was just 2 crores. And recently in Mumbai, they had sponsored a very big fashion event. So that caught the income tax department's eye, and then they have issued notice to them also. So if you see, if you are the revenue is 110 crores and your uh, income reported is 2 crores, the net profit is just around 1 or 2%. That's not enough in this industry, whereas you are having a very small warehouse, very small retail shop, and there is no as such presence. So the only presence is on the social media. You are gaining so much amount via UPI and online banking, and you're not reporting your income. Maybe you are trying to evade your taxes. So these are the cases where the income tax department is, focusing on, and the department has issued notices from October till 15th November. And now these after 45 notices which have been issued, I think they will be issuing more notices to more such people.
Right. So the IT department has also said, like you were also pointing out in your initial answer, that in some cases that no taxes have been paid at all, and in other cases an underreporting of income has been done. So explain to us how and why is this happening, and what small business owners on social media platforms should avoid doing.
See, Sakshi, what happens is when you are running a business, the way you pay taxes is you earn some money, you get some income, and you deduct the expenses incurred to earn that money. So in some cases, there may be instances where you have just started the business and your revenue is less than the actual, the amount you have paid to earn that revenue. So initially, maybe you bought a lot of stock, you incurred so many expenses like rent, electricity, water, staff, and everything, and the sales were not enough to fund all of that. But these are the cases where the expenses are really genuine. I feel in the 45 cases where the department has issued the notices, maybe few of the entities are reporting losses, and they are showing losses which are not actual losses. Because see, if you are earning some money on by selling online, the cost involved is very less. You don't need any big warehouse, big stores, and you don't need so much staff to be there. The only cost which you have is of the product, if you are trading, the purchases, and maybe the social media marketing. That's it. So and even if then you are reporting loss, or maybe you are under reporting your income, then of course the income tax department will get hold of you.
Okay, understood that as well. So, what are the taxation rules that really apply to such social media sellers? How much tax are they really liable to pay, and how do they know that?
See, if you are running an online business, it is as good as you are running any other business, even offline business. So, what happens is, like I explained, the amount you get the credit in your account, basically that is your revenue. You will subtract the expenses incurred to earn that revenue, which will be basically the debit side of your bank statement, and basically you will prepare your profit and loss account, which will show the net profit earned on that business, where you can subtract all the expenses which you have incurred in that business. Now, the net profit, whichever net profit is left, that will be taxed according to the tax provisions. So, if you're talking about an individual, a proprietor who's running such a business, then the slab rate will be applicable, which we discuss quite often. If you are running a partnership firm, or say LLP or a company, then the tax rate is 30%, 25%, whichever the case may be, and accordingly you have to pay the taxes. So
Okay.
the only difference between an individual and business is that if an individual is earning income as a salary, then you can't deduct the expenses. But in business, you can deduct the expenses. So
Sure.
basically, these business houses, they usually play with the expense part, and with this, they tend to evade taxes.
Right. So, what kind of ITRs do they need to file? Such small businesses, like, we know for salaried individuals what all tax forms do they file. But in case of such businesses, what are the ITR forms they need to file?
So, see, there are two ways of filing business return. One is where you are preparing your balance sheet and profit and loss account, and you are, or maybe you are getting audit also done depending upon the turnover. So, basically, if your turnover is above 1 CR, and in case of online payments where your cash income or expenditure is not more than 5%, then 10 crores is the limit. So if you are getting your audit done, and or maybe you are filing just without audit, normal P&L and balance sheet, then you have to file your ITR 3. If you are going for presumptive is where you don't have to prepare the books of accounts, you don't need a proper balance sheet and P&L, and on presumptive basis where you have to actually report the actual income. You can't just deem any income. There's a confusion in law. I mean, there's a confusion in the
Sure.
professional fraternity, that the deemed income will be reported, but in reality you have to report the actual income. In this case, you can file ITR 4, which is very easy, but then you have to see the turnover limit. If you are crossing 2 crores, you can't file this return in case of business, and in profession, of course, this limit is 50 lakhs.
Okay, understood. Now, is there also a way for such businesses to legally reduce the taxes, just like investments play a part in reducing the salaried classes tax outgo? What is the option available for such businesses?
See, if this business is run by an individual, so basically it's a proprietorship firm, in that case, you can first reduce all the expenses. You can prepare your P&L account, and after that, once you go to the slab rate, you can utilize all the deductions which an individual gets. But the same is not available with any partnership firm or company, private limited company or anything, or LLP, because in that case the slab is not applicable. You have to pay taxes on flat 30%, 25%, 22%, whatever. But
Okay.
the good part is that you are anyways getting all the expenses deduction. So
Sure.
that itself reduces the tax, and you hardly pay any tax on the business. The
Okay.
basically the net profit should be such that you are not reporting loss or under reporting profit, that the industry is basically earning high and you're reporting a low income. Then in that case, of course, the department will get to know that. And if you're
Okay.
reporting your correct income, then I don't think so there is anything to be worried about.
Okay, fair enough. Now, one other question that comes to mind is, of course, social media influencers have also come under the radar of income tax department as well before. They've also been sent such notices even before as well. So, what happens in their cases as well? Because many a times we do find social media influencers also promoting some of the products and linking them on their websites as well, where people get to buy those things and then they end up getting some profits out of it as well. So how does that thing work really?
Yeah, of course. So the department is after the social media influencers also since a long time now. And the thing is that the social media influencers earn a lot of money through various channels. Like they earn through their views, ads, sponsorships, selling products online, promoting anything. And there are so many ways to earn online. Now the thing is, of course, every channel by which you are earning money will be taxable under different head. But the thing is that you have to pay tax. You can't say that this income is not taxable. So basically, you have to report your income, and you have to pay tax. And majorly, this income is reported as your business income. So again, the same thing applies, although you are not selling any product, but this is your service. So in this case also, you have to show your business income in your ITR, pay your taxes, and maybe in few cases even GST will be applicable depending upon the turnover. So both the compliances needs to be checked.
Okay, fair enough. Well, on that note, thank you so much, Gauri, for discussing and sharing all these valuable insights for all our viewers as well. I'm sure that this video would have given enough clarity as far as what are the kind of taxation and tax liabilities that you need to pay in case you're running, a small business on social media. So this is the time that you go back to your financial advisors and your chartered accountants and find out if there has been any kind of underreporting of income or tax evasion at your end by mistake or by intention, and then perhaps rectify those things until and unless if you want to attract the IT department's ire as well. Well, many thanks for taking the time out and speaking to us, Gauri, and many thanks to all our viewers for joining us on this special edition. Do stay tuned on to Business Today TV for a whole lot more action coming up on the other side for you.